Exactly.
So it was a psychological test.
Hey, so anybody new on the call that please introduce yourself, and would love to hear what you got going on and what you're up to.
I am a newbie to this group, so I lead the hi Brendan. I lead the talent acquisition function for EY's contractor recruiting team. We are called Gig Now, which is very fancy, but we're an internal recruiting team, and I'm interested in this group. Looks like there's some synergy here, and I connected with Brandon recently, and that's how I got here. So very nice to meet you all.
Welcome. Thanks for being here.
Thank you.
Who else? Anybody else?
Hi. Oh, Zach, go ahead.
Oh, I'm sorry, please.
McLean Robbins, Vice President of Marketing at MBO Partners. I've had the opportunity to meet many of you guys off of this type of call, but my first time to this session, and thank you so much to John and to Brandon for the invite. Steve King and I are going to be sharing some highlights from our flagship State of Independence in America preview research in just a little bit. So by way of background, I've been with MBO for 6 years, and very involved in the future of workspace. MBO is a tech platform connecting independent professionals and enterprise organizations to make it safe and easy for them to do business together. So thanks so much.
Awesome. Welcome. Thanks for being here. And Zach.
Yep. Hi, I'm a longtime lurker, but I haven't been in a while. I'm a co-founder of Intrepid Ventures. We connect, similar to what McLean had shared, independent professionals from around the world with high growth and early stage funded startups. We're early, but got a lot of paying customers and huge proponents of future of how we work and why we work. Thanks for having me.
Awesome. Yeah, thanks for being here. Anybody else? Any new faces? Nope. Cool. Well, maybe we should just dive in, Steve and McLean. You want to kind of share the research with us, because then I think it'll be a really, really great opportunity to have some discussion after that. There's so much going on in the marketplace, and so you guys want to take it away?
Sure. Yeah. McLean, go ahead.
Okay. Steve, you want me to pop up the slides that we have? Would you want me to do a quick bio?
I can do
background? Okay.
I can.
I'll let you pop up the slides, and while you're doing that, I'll just give a quick overview of this research. This is our flagship State of Independence in America research. This year, in our 11th year, it is the longest running, deepest dive into the American independent workforce, tracking the sentiments, economic viability, and size and growth of this sector of the economy. We decided to do a brief preview. We had surveyed this audience in the midst of COVID last summer, and really wanted to see how the audience had changed post-COVID. And so we advanced, the full report will be coming in November, and we advanced this research just to show you guys some of the incredible growth and change that's happened in just one short year. So we'll walk you through some of the 5 key highlights that we came out in our preview report, and then hopefully have a discussion about some of the fun stuff that's coming later this year as well. And of course, we'll let Steve take it away, because his firm did the research, and he knows the data better than anybody else.
Well, thanks, McLean. And I assume everybody can see it, that I'm sharing my my slides. We don't have very many slides. I think there's 6 of them or 7. The big, and as McLean said, we've been doing this study for 11 years. So we have quite a bit of history, understanding what's going on, tracking it over time. And this year, the big finding was that the number of independent workers surged quite substantially. That by itself was not a surprise. We had plenty of other indicators, information from the platforms and the online platforms that were growing well. Business applications were up quite substantially. But what was a bit surprising was the extent to which it grew. We had it growing 34%. And you need to understand that labor markets move relatively slowly. I mean, it was from 2011 to 2019, we were growing at about 2.5% in terms of the number of total number of independent workers. And so 34% is pretty stunning. The overall labor market during that period was growing less than 1%. And so we've had quite a shift. And obviously the pandemic had a lot to do with that. The 2020 numbers were down 7% from their prior year. And so we saw saw quite a surge. I mean, people lost work, they lost hours, they were stuck inside, so they turned more to online methods. We'll cover more reasons as we go forward. We look at this in two broad groups. One is the full-time people that are doing independent work, and independent work in art is pretty broadly defined as alternative to a traditional job. But that grew about 25% from 13.6 to 17 million. The part-time workers, which are actually 2/3 of this group, basically, they grew much faster, 34% overall. And then the top blue group that's 23.9 in 2021 is a subset of part-timers that we call occasionals. And occasionals are people who report that they regularly work as an independent worker during part-time during an average month, but they don't have set hours. Some weeks they work a lot, some weeks they don't work at all in a lot of cases. You can think of them as kind of like the Uber driver who might work 10 hours one week, not work for 2 weeks, work 30 hours another week, not work again. And that group actually grew the fastest, grew at 51%. And that group primarily does their work because they're supplementing their income. And that group rose the most for obvious reasons with the pandemic, is a lot of people needed to supplement their income. There's also folks in there, the creator economy people kind of jumped in there and shot up in 2021 that are doing it out of passion reasons. There are people that do that to pursue hobbies and turn them into business or learn new skills. But overall, that's primarily a supplemental income piece. In terms of the overall numbers, we're a little stricter in our definitions. We're interested in the people that are earning income that's significant to their household income. And so we tend to be a little stricter, and they have to work regularly. Other studies tend to use anybody who has done any independent work over the prior year. And neither definition's wrong or right. It's just the purpose of our study is to get at who's doing this as an important part of their income source. And so our overall numbers tend to be lower than other studies. But as I said, McKinsey, when they did their study a few years ago, came out with like 65 million. Upwork's study last year was 57 million. It was the same as the prior year. And so you'll see other numbers, you'll see lower numbers in ours also, but the growth rate should all sort of come into line. So this was really the big finding, the surge, it was large, it covered all segments, and there are a lot of reasons behind it, and we can get into those as we go along.
Hey, Steve, we can quickly address Balaji's question on our definition of full-time independence, 20 hours a week or more on a weekly basis. But I don't believe that we're tracking that they don't have full-time employment throughout the year.
They actually, well, the question, it is 20 hours or more. They do say that they are full-time employed regularly across the year. That doesn't mean that they were fully employed at all times. And so when we actually asked them and we put them through a process to go at it, that they go through to answer these questions, they will say that they were a full-time employee, and they are normally a full-time employee. We actually do ask later on if they lost their job, and I don't off the top of my head have that number. So, but I could get back to him about that. Does that answer the question?
I think so. He's also asking if we have staffed employees of staffing firms, and I think that that's a self-identification question. If they identify as independent for purposes of the study.
Yeah. We ask if you get data. We ask if you work. Our definition includes people that report that they get work through an agency or a staffing firm, and we do have those percentages. they line up roughly with what with the percentages that you get from that, like the ASA study and some of the other studies in the SIA studies in the staffing industry. We're pretty close to their numbers in terms of that group.
And I'll let us get into the demographic breakdown. But Chris, your question about part-time worker revenue is an interesting one, because we do track the income data, but Steve likes to remind me that's not the most accurate of our data pieces that we get. And so it seems the income rather widely varies for those part-time workers, and some are doing it by choice and some are doing it to supplement their income, which we do have some stats on here in the presentation as well.
Yeah, so about half of part-timers, a little over half of part-timers report that they have a traditional full or part-time job. When you're looking at the part-timers, you are looking mostly at side giggers. The rest of them are doing this part-time for traditional reasons. You see caregiving, you see students, you see people who are retired or semi-retired as the motivations for doing it. But a large percentage of them actually are classic side giggers, side hustles that are doing it primarily, as I said, to supplement their income. In terms of demographics of this group, it's really interesting. In 2020, we had the first recession that since the government's been tracking it, where women actually took the brunt of the recession, and you know, a lot of people called it the she-cession, was a term that was popular last year, and we saw it, you know, back in 2019 and the years before that. Women were about roughly 50%, sort of echoing the overall workforce in terms of their participation as independent workers. Fell substantially, and actually the interesting piece of last year is, if you look at the decline that we saw in independent workers, about 70% of that decline was the decline in female independent workers. That came back here in 2021, and the combination of what happened there is a number of the women who left came back, but also the need for flexible work, the need for, you know, more autonomy and control of their schedules in particular. Women who obviously take on a greater societal role in terms of caregiving and other non-work activities needed the flexibility that independent work provided. So we saw them come back and get back to the rough 50%. So quite a turnaround in the female side. In terms of ages and age cohorts, we find it exciting that millennials and Gen Z crossed the 50% threshold. But we're the only people that, you know, we're the only people that get excited about demography besides hardcore demographers. So the rest of you probably don't care. But it was the first year that the two younger cohorts became the majority of the independent workforce.
Well, and I think 68% of new entrants to the market were Gen Z and millennials. And for those of us tracking this on the enterprise side, what's really interesting is that we're seeing a market that broadly is getting younger and younger entrants and younger people interested in independence. So, you know, the earlier we can capture these people, show them how to grow and build viable businesses, the better we'll be prepared for the growth of this segment in the long term. And I'm as interested in you are, Steve, in the return of the females. You know, we've been tracking the sentiments about why women go independent for years. And it was really brought to light in the pandemic that, as you said, they left for caregiving responsibilities. They left because they're overrepresented in industries like hospitality that were so hard hit. And it's very encouraging to see them come back the way that they have. I'll be eager when we release the full study to show the rationale as to why women did certain actions this year versus men.
Yeah, and Gen Z is interesting. You know, all of the polling shows that they're the most entrepreneurial generation ever, but so were millennials at that age. So were baby boomers at that age. There's life stage effects that also come in. So while we're very optimistic about Gen Z and it becoming that generation, likely becoming more oriented towards independent work and self-employment. Life stage does kick in as they get older, and we're already starting to see that with the millennials who are behaving more and more like their Gen X older brothers and sisters as they start to move towards middle age. So it's interesting stuff.
Just stop calling us geriatric millennials. It's very, very insulting.
Geriatric.
Makes me feel old. Go ahead.
It's interesting around satisfaction. We talk, since we first started this, even before this first study in 2011, we talked about the 3 myths of being an independent worker, being self-employed. And the 3 myths are that people didn't choose it, they're not happy with it, and if they had their choice, they'd go back to traditional employment. And all of those are myths. The large percentage in all 3 prefer, chose, and plan to remain independent workers. And I just thought we'd illustrate it with this this one chart, not go into detail on the others. The other data is available, of course, but what we've seen consistently is the majority do report they're satisfied, and that satisfaction, there is a cyclical component to it based on how the economy is performing. And as we saw starting in around 2015, the economy started performing better. The traditional job market got a lot stronger. And so the people who didn't want to be independent workers were able to get traditional jobs. And the interesting impact of that is it raises the percentage of people who are satisfied. And so the satisfaction went up really for 2 reasons. One reason was they were more satisfied. The economy was better. They were doing better, but also the people who were dissatisfied left. So we do see that. In addition to this, we've been tracking data around happiness and health, and about 87% this last year in 2021 reported that they're happier because they're an independent worker, and 76% reported that they felt they were healthier as an independent worker. And we've been tracking those numbers for 5 years now, and they started in the 70s. They've gone up over this period. And there's plenty of other data around happiness, a research field that we track, that shows autonomy and control. If you have work autonomy, control, and flexibility, you are happier than people who don't have work autonomy, control, and flexibility. No great surprise there. And so independent workers, most of whom have some level of autonomy, control, and flexibility, that's why they're happier than if they don't. And the other point of it is when you actually dig into the numbers and look at the people who don't have autonomy, control, and flexibility as independent workers, they're not happy. So it sort of fits with the broader set of happiness research. I see a bunch of stuff in my chat box. Is there anything?
Yeah, I'm answering the questions going through here. I think the one question, Zach, I'll get to the enterprise one in a moment, but Carrie had a good question. She said, how do you reconcile the supposed need for millennials and Gen Zs to find purpose at work with the drive for independence? And I don't think that the 2 are really separate issues. I think we find that millennials and Gen Zs are finding fulfillment in the work that they do by pursuing and building their own businesses in many cases. And so the drive for independence and the need to find fulfillment are often one and the same. They're building businesses around passion projects and pursuing areas of learning that they find interesting and they might not be able to get out of a traditional job. So we're seeing this trend continue at all ages, but particularly enlightening, I think, in the Zers who are really, really highly entrepreneurial.
Yeah, all the generations have always reported that one of the reasons they do independent work is either to pursue a passion or be able to do work that they enjoy. And so, and also to do work that reflects their values. So we've seen that from the very beginning of the study in 2011. But certainly Gen Z and millennials are now reporting that at a stronger level than they do than older cohorts. Again, you have to break it down. There are obviously a group of Gen Z and millennials. There's a substantial minority that are in jobs they independent work that they really don't like. And so that there's a little difference there. And again, it gets back to the ideas around flexibility and control. But in general, we're seeing more and more interest in independent work from that group. And I go back to the creator economy, which is, doing TikTok videos and stuff like that. I'm it's more important than that. But anyway, that's part of that, where they're saying, I really want to pursue my passion. And we are seeing more interest in that from the younger cohorts. Since we've been tracking this, we've seen a real substantial change in how both independent workers and traditional workers view risk and security around jobs and work. And we think this is maybe certainly one of the most important findings of the study. And if you look at the top one here, this is full-time independence, so people who are doing it full-time. And when we first started this study, only about a third said, I feel more secure working independently. And other data back that up, where independent work, not surprisingly, was viewed as less secure and riskier. But what's happened steadily over the course of this study is the percentage of people, independent workers, saying they feel more secure has increased. And we saw a big jump in 2020 and 2021. And of course, that reflects the fact that the traditional job markets were disrupted. When you talk to the people in interviews that we do and through other survey data, the reasons are pretty straightforward. These folks feel that they have control over their destiny, control over their career, and they're in charge, instead of being at the beck and call and the whims of a mercurial corporation or employer. And so you hear that very clearly. And then the second piece is, these folks will tell us that they have multiple sources of income, and that while they could lose one or two clients or lose one segment of their income, it's unlikely they'd lose them all. And particularly over the last couple of years, they saw traditional employees get whacked because of the pandemic-induced recession. And so they're saying, my multiple sources of income means I'm also more secure. That's a pretty big shift. And then we've been tracking traditional employees in detail since 2018. We started doing that, including several thousand traditional employees in our surveys. And that's really interesting too, because they're actually reporting working independently is less risky. We're up to 3 in 10, almost a third, in 2021, reporting that, following the same trend. And their view on that, again, when they look at independent work, particularly in the last 2 years, they've seen a lot of independent workers were able to maintain their employment, and our data shows that the decline in independent work was substantially less than the decline in traditional jobs. So that's happening. And then they sort of see the same reasons. And then the third reason is really, everybody believes traditional jobs are less secure and riskier than they were, several decades ago. And so people, when they're looking at independent work and trying to decide whether to become an independent worker or get a traditional job, it's always been this trade-off where I want to be my own boss. I might enjoy independent work, but I don't get benefits. I don't get a regular paycheck. And traditionally, if you had a traditional job, you had a fairly high level of job security. And all of those things have sort of eroded away. And so the choices become much more even. And this is a pretty fundamental shift in how we view the risk and security of jobs in general. And the net of it is all jobs are viewed as riskier. And because of that, more and more people are saying, I may as well be independent if the risk levels are equal. I'm not going to go into great detail on the other part of this. Is we've done a number of risk studies, and basically about 60% of Americans really don't have the risk profiles to be independent workers. They don't want to deal with the lack of predictability of income. They don't want to deal with the lack of benefits. They don't want to deal with the perceived lack of security in their eyes. And so one of the things that's really interesting to us is, as things become riskier, we have to figure out societally and regulatory, in terms of regulatory environment, how to make independent work safer and more secure, so those people won't freak out when they work.
I'll tie in a couple points here that are coming into the chat too. Zach, you asked the question about what role independents are playing in the enterprise arena. Are there barriers to entry? Enterprises taking advantage of this demo. Balaji asked a question about the talent gap. And so I'm gonna try to answer both at the same time as we move through this data here. I think what you're seeing here, looking at risk, particularly for we call them the independent service professional, the full-time independent who serves businesses by and large earning 6 figures or more per year. These people in particular, used to working with enterprise teams, they sit next to full-time employees who see how viable and important they are to highly skilled businesses. And so I would suppose, I'm not going to break the data down like Steve can, but that a lot of those traditional job holders that sit and work with high-end independents all day can see and feel that it's less risky because they've got real life examples of people who are doing this work and doing it successfully. We're seeing enterprises increasingly comfortable with engaging this type of talent and quite frankly, desirous of doing so for the financial flexibility, for the productivity gains, et cetera. We do have a new study that just came out. It's a subset of this that looks at enterprises and their use of the contingent labor market for the highly skilled independent professional. The data is very, very positive on the growth there. And Balaji, to your point on the gap in how fast you can hire those full-time independents, and I think one of the nice things that we're doing at MBO, sort of through our workforce optimization offering, is really helping independents understand when you need to hire an FTE and when you can partner strategically with a team of independents or hire for specific skills and deliverables, and actually use independents where you previously would have thought you need full-time employees. So hopefully some of this data is useful to making that business case as well.
Yeah, and I would add one of the data points we've been tracking that we like and is we ask both independent workers and traditional workers, are more of your friends becoming independent? The language is a little different to use self-employed and such. And when you look at traditional job holders, we've been asking that question of them since 2012, and about 15% said that back in 2012, and we're up to 40% saying that today. And so they are seeing their friends and acquaintances and go independent. I think they're also rubbing shoulders more and more. Some of the higher growth areas are clearly examples of that, particularly in IT, where oftentimes contractors are making a lot more money on the surface, at least, than the employees that they're working with. And so that's definitely having an impact. And trends happen like this. Once you get to a certain threshold, they start to accelerate on their own because people become more comfortable with it. And I think over the last few years, we've reached the point where independent work has just become more acceptable, primarily because everybody has examples of people. They know people that are doing it. So we've reached that scale point. A lot of online marketplace interest in this group. We've definitely, another interesting trend, you go back to 2012 and very few people, relatively few, were reporting that they were using online marketplaces. That's obviously shot up over the course of the study. And then we saw the big jump here in 2021 over 2020, kind of breaking the pattern of steady, decently high growth to quite high growth. No surprise there, given what we've already talked about. In terms of people needing alternative sources of income, and supplemental income is the primary driver of this. And what we saw in 2021 is the platforms actually enabled more people to be able to pursue independent work. And in particular, I mentioned the occasionals. The occasionals are primarily looking for highly flexible, low friction work. And by that, I mean, highly flexible means no schedules. I self-schedule. Low friction means it's very easy to start, very easy to stop. If you think about most traditional jobs, part-time jobs. Even if it's a part-time job that you're looking to supplement your income, most of them come with schedules. And most of them also come with interview processes and weeks to get the actual job. And then all sorts of rigmarole that corporations put on us or companies put on us when we are employees. And that just excludes a lot of people, whether you're talking about caregivers, students, people with health issues, other obligations, people with traditional jobs have been sort of traditionally excluded. And because of that, there have been historically two areas where that wasn't true. Real estate sales, which is highly flexible and in general low friction, has always been an area where people who needed that kind of job traveled, was very popular. And then the multi-level marketing businesses were the same thing. And each of those industries has many millions of independent workers working in them. But what's happened now is with the online marketplaces have made it accessible to people who don't necessarily want to sell for a living. They want to be able to do other things. So that's been a big driver in the use of the online platforms. An important point here is that only about 13% of the independent workers report that online marketplaces and platforms are their number one source, their primary source of customers or work. The vast majority of them use it for secondary and tertiary sources. They use it to fill in their schedules. They use it to find new customers. They use it to enter new markets and learn new skills. But this has definitely become mainstream. For service providers to businesses, word of mouth is still by far the number one primary source of business. But catching up rapidly is social media, and particularly more and more social selling is going on in our environment. So online's very strong, online platforms and social media, but word of mouth continues to be the number one source.
I'm not surprised by any of that data, particularly given the strong entrance of the younger demographic into the workforce. I mean, I think everybody on this call has a LinkedIn profile, but doesn't necessarily expect that that's how they're going to get hired for their next job. I think an online portfolio and participation in these marketplaces is increasingly being seen for independence as a way to potentially fill stopgaps in work, to take a lower rate, to try a new project, and just one of many of the suite of sort of arrows in their quiver. It's interesting data though, and certainly speaks to the viability of those companies who want to host even branded marketplaces for opportunities for independence within their own network and some of the larger marketplaces in general. Of course, we're seeing the stocks go up on all of those as well.
And the use of those marketplaces skews quite strongly towards younger independent workers. So not surprisingly, Gen Z and millennials have a much higher percentage of use than aging boomers. We also track how non-independent workers, so these are people with traditional jobs or not currently in the workforce. And this is really interesting data because every study we had done up to 2019 showed 12 to 14% of Americans would say that they're going to become independent, either probably or definitely over the next 2 to 3 years. That has almost been an economic identity in that other studies asking people if they're going to become a small business owner or self-employed, or other studies about independent workers, it's very consistently 12 to 14%. Babson College has run something called their Global Entrepreneurship Monitor Program, the GEM program, for about 15 years. And they ask a similar question and they've gotten 12 to 14% every year. Interestingly enough, that of course, when you ask questions that are aspirational or things that seem like they would be cool or fun, you get a lot of false positives. In our work, we think about 8% of the people. So 8% of that 17% will actually do it. So you'll often see much higher numbers than reality. But this is a big shift in the percentage of people saying that they're going to do it. So we think over the next 2 to 3 years, we will continue to see strong growth in independent workers based on the way they've responded to this over the last couple of years.
And I chime in that, like, we've heard so much about, we're calling the study the Great Realization. I know a lot of people have talked about the Great Resignation of workers, but we're really seeing this as a growing trend of people realizing what matters in their lives, that these economic and financial concerns are not necessarily going to go away by simply getting a new job. They may actually be alleviated by going independent. And this big shift here that I just can't get over is the fact that these independents are increasingly feeling like they think it's more secure to steer their own destiny and take ownership of their lives and their careers. And this is, as an individual who went through this past year, like everybody else, you know, certainly makes you think a lot about what matters in life and how to get through the day and create a life that is the one that you want to lead. So the fact that fully 50% of people say they feel more secure steering their own destiny is positive data indeed.
But it's back to the changing nature of changing view of risk. We also take a look at digital nomads, and I just threw this in because it's always fun. People always like to hear about digital nomads. Digital nomads in our study are people that are nomadic. They are living in a minimum of 3 different places over the course of the last year or the planned year, as opposed to just people that are remote from their home base. And what we've seen is in the digital nomad piece of this study is, if you go back to 2019, about 2/3 of digital nomads were independent workers. In 2020, about 2/3 of digital nomads were traditional workers. And that's held again this year. It's gone up even a little bit more in 2021. And what's happened, of course, is that traditional job holders have been unshackled from their desks, and they're able to be nomadic. When you look under the hood of those traditional workers who are nomadic, they also show a greater propensity towards pursuing independent work or potentially pursuing independent work. And so it's an interesting group for us to study. We study them primarily because they're kind of remote workers on steroids. And so if you want to understand sort of the leading edge of how remote work works, digital nomads, have been forced into to do their jobs properly. They have to be just outstanding remote workers. Oops. And so we have, so anyway, they grew again this year. The return to work has been pushed back a little bit. We'll see. We're expecting their numbers to continue to grow, but next year, a lot of these people likely will be called back to their offices. So,
yeah, this data is going to come out on hopefully Thursday of next week. We've got a pretty good deep dive into the sector of the market, some of their sentiments, but I think a couple key stats here beyond just the growth in numbers. 112% increase 2019 to 2021. Is that these people they're tech savvy too. So, I'm sure there's a lot of those workers who are using marketplaces. They're traveling both domestically and internationally. COVID's cured a little of the go work from Bali on the beach for people, but we're really interested in this growth in this market. And certainly the data is going to be very interesting to share with you guys next week, as well as some enterprise assets around, establishment of policies and things like that. If you're an enterprise on this call interested in setting this program up for your own workforce, FTE or IC.
So that's what we wanted to cover today. The report's available on the MBO website. If you search MBO SOI,
I popped it in the chat for everybody too. So
oh, okay.
Yeah, and I think Karen, I'll sort of dive in through the chat here to look at some of the questions that come in.
Yeah.
I guess.
Thanks, McLean. Thanks, Steve. That was really awesome. I love the perspective and some great facts. I'd love to get a copy of that deck just because I'm going to definitely include some of this in the book. So that we're in the midst of.
Yeah, we could share the slides today with the group. There's nothing super proprietary in them.
Yeah, that's great. No, would really appreciate that. Let's open it up. Any other questions? There's some really, really great stuff going on in the chat, but if anybody wants to kind of jump in, let's stop sharing can we stop sharing the screen?
Oh, sure.
Yeah,
sure.
no, thank you. Anybody want to raise their hands and jump in? And Steve, it sounds like you got something.
Yeah, I mean, it's funny, this group kind of has known this trend is happening. Like this is the group that like is looking at this. I think what's most surprising here is, holy moly, it's so much faster. It's coming at such a higher velocity than the increase is stark. And we knew that COVID sped things up, but wow, to see it in black and white is really amazing. So kudos to the team put this together. Thanks.
I was just going to plus one that I'm still actively kind of selling in this space, right? And so I get buyer perspectives of willingness to try, yeah, it's significant changes. It's, you bump into people instead of explaining like the whole world and who are these people, the nefarious freelancer. Like, you don't get that anymore, really, or not much at least. You get mostly like, yeah, I've done that before. Okay, how are you slightly different, etc. So the buying pattern of the buyer, the hiring manager, is significantly changed. So I think that's just a piece of info I wanted to share.
That's awesome. Anybody else have any questions?
Yeah, I have a question. I understand that this survey was in US, but do you have any idea how it can look like in other countries? I know that Europe is also there is a quite significant increase in interest in this area. But what about, I don't know, China?
Yeah, in the developed world, or yeah, the OECD countries, the percentages, they're seeing roughly the same levels of growth. There's some differences due to many non-US countries have third levels of worker classification, and so people that might be independent workers here are covered under a third level of employment classification in some countries, but the general trends hold for the European countries. China, interestingly enough, has historically, up until about 3 or 4 years ago, 5 years ago, was very much a you worked for a company kind of country if you could. They've had quite a shift in the last 5 or 6 years, and independent work is growing quite rapidly there. They were one of the fastest growing co-working markets going into the pandemic. And it's interesting, when you go to China, nobody's an independent worker or a freelancer. They're all entrepreneurs. If you go home and you're an entrepreneur, you gain face. If you go home and say you're a freelancer, you lose face. And so they do it differently from terminology, but the growth rates are still there. Japan's always had a fairly large self-employed sector, despite also being a very, very strong corporate work for a corporation culture. They too have seen the number of independent workers growing. There's less visibility there's less visibility in the developing world, so we don't have as much information on that. But anecdotally, it seems clear that the same thing's going on there.
Thanks.
Can I ask you, Steve, a question about rates? Do you have any stratification or segmentation by rates? Is there any different behavior at 75 plus rates or 50 plus rates versus below? The risk perception is different when you are highly skilled worker and there's a great demand for you to become an employee versus when you're a low skilled worker. I think I'm just wondering, are there all of this data that you shared, which is awesome, how does that cut by highly in demand skills / rates versus other skills?
I love this question so much, because it's just like the data for the skilled service professional is like the happiness is on steroids. The people they feel more in control, they feel happier, they feel even healthier, they're making more money. So that the more you make, the more you want to do this, and the more viable that you see the career path. So I think for those independents serving the enterprise market, this is just like the time to shine is now.
Yeah, and we can actually we'll be providing a cut on high income workers. And so we'll be able to share that with you at the high income side. And McLean got it right. They're just off the charts in all in all these things much stronger. The happiness thing is really interesting because above about $35,000 in income, happiness does not correlate with income very strongly. Happiness correlates with flexibility, autonomy, and control. And so that is the one where it's not true. You know, the independent workers who are making $45,000 a year, if they have autonomy and control in their work, report very similar levels of happiness as people making $500,000 a year who have autonomy and control. And so that happiness is the one that doesn't correlate. If there is a slight correlation there, but it's not a strong correlation with happiness. But in the other stuff, satisfaction, choice, and all those other things, it's much higher for the high income.
Thank you. Appreciate it. Great research, by the way, Steve.
Yeah, really great stuff, Steve. Thanks. Who's next? We've probably got time for one more question.
Let me ask a quick question, John. Is
Yeah,
Barry?
Barry.
If you guys look in your crystal ball to next year, we're seeing 34% growth year on year, 77% of independent workers very satisfied. What do you reckon it's going to be in a year's time?
Satisfaction will stay high. We think the growth will drop quite a bit. I mean, we're talking about historically, this was growing at 2.5%. So we definitely have been accelerated a lot by the pandemic, but you will see some reversion to the mean. We're thinking 4 to 5% next year, maybe 6%.
Yeah, faster than the growth of traditional employment, though.
Yeah.
I mean, we've seen
like
outpacing of traditional employment growth. So that's strong.
By 5 or 6 times.
Yeah, that's really helpful. Thank you very much. Great job, by the way. Great report.
Yeah, that's really great. Great, guys. I know there's some other questions. Unfortunately, I think we've got to wrap it up. So Steve, why don't you and McLean just flip your email address into the chat, and then people can reach out directly and ask any questions. And love this. I mean, I think it really reminds me, and I shot a note to Barry on the back and Bryn on the backside. You know, I wonder if we should be thinking about doing, this research roundup. I don't know if you guys remember, but in 2019 we did a research roundup. We took all the research in the industry and kind of did essentially it was like a 7-page executive summary, just highlighting some of the things. And it's something that I think the group should think about doing again. At least I would be, an advocate for that, just because I think, when we heard this, it's such a great research, and likewise, what Tammy provided from Kelly is another great set. But I don't know, maybe I'm just in the middle of trying to write a book that I'm so lost in the forest of great research and details. And sure, it'd be great to have one place we could all go to and say, oh, this is the executive summary for the industry research, and then digging deeper into each of the reports. So anybody that's kind of interested in that, let me know and let's have a further discussion. But for the 2019 version, Brandon just put that in the chat as well. So it looks like we're at our time. Love you guys as always. Thanks so much. Always amazing, Steve and McLean. Really, that was just really, really great work, and look forward to kind of seeing that out next week. Make sure that you shoot a note to Brandon, and then he can get the link to everybody when the real report comes out.
Share it out. Thanks for having us.
Yeah,
thanks for having us.
Going, guys. Talk soon. Have a great weekend. Take care.
Okay.
Ciao.
Thanks, everyone.
Everybody.
Bye.